There's one line on one piece of paper that turns a liability into an asset. Your house, your 401k, even the people you love the most. In 2026, most of them are draining you dry, and you don't even see it happening. I'm going to show you the exact line that flips it. I'm going to show you how to turn a something taking money from you and turn it into something making money for you. This is Rich Dad Radio. Let's go.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Welcome to the Rich Dad Radio Show, the good and bad about money. This is Robert Kiyosaki, and today is just you and me. And we're talking about what the rich are teaching their kids about money. There is one line on one piece of paper that turns a liability into an asset. Most people never find it. Your banker isn't going to show you. Your real estate agent isn't going to show you either. They need you to believe the house is already an asset. I'm going to give you that line today. But first, you need to know what's already eating you alive. Because in 2026, it's not just your mortgage. It's your car, your credit card, your kids' tuition, maybe your mother. Most people think a liability is a bill. It's not. A liability is anything with its hand in your pocket while you're asleep. And right now, in this economy, you have more of them than you think. We'll count them in a second. Now, financial literacy. Sounds complicated. It's not. It's 6 words. Income, expense, asset, liability, cash flow. That's it. That's the whole system. You spent 12 years in school, maybe 16. They taught you the capital of France. They never taught you the difference between an asset and a liability. Here's Rich Dad's definition, 9 words. An asset puts money in your pocket. A liability takes money out of your pocket. That's it. That's the whole test. Not what your accountant calls it, not what your banker calls it, not what some financial planner calls it right before he tells you to diversify. Let me say this again, diversify. That's Wall Street speak for we don't know either. Diversify into 12 things you don't understand, so when one fails you can say, well, at least it wasn't all my money. That's not a strategy. That's a confession. Don't take my word for it. Take Warren Buffett's, the richest investor alive, and he said it plain. Diversification is protection against ignorance. That's his phrase, not mine. Translation. If you actually know what you're doing, you don't need 12 different things. You need one thing that you understand cold. The more they tell you to diversify, the more it means nobody in the room knows what they're doing. Here's the real test. Every dollar you touch is moving in a direction. Is flowing into your pocket or is flowing out? Poor person. Money comes in, goes right back out. Every month, like clockwork. Middle class, same pattern, just bigger numbers. Bigger house, bigger car payment, bigger liability. The rich, they build something that pushes the money the other way. That's the whole secret. It's not your degree. I don't care if you have a PhD or you dropped out in the 9th grade. If you can't control which way the cash is flowing, you are not rich. You're just busy. Most people assume if it's expensive, it must be an asset. Wrong. A liability can cost you a fortune. An asset can cost you nothing at all. The only thing that matters is which way the money moves. So let me show you the trick. When we get back, I'll go over the one line that flips the whole thing over. I've got a neighbor, retired guy, smart guy. For years, he's been telling me about this business he wants to start. He's got the idea, he's got the plan, he's even got the name picked out, but he never launches. You know why? The setup. Which website builder? Which domain company? Which email tool? He'd open 5 tabs, burn 3 hours, and have nothing to show for it. So the business stayed in his head, where it made him exactly $0. Last week, he finally launched. I asked him how. He said, Robert, I didn't build a website. I had a conversation. He went to Hostinger and just told their AI what he wanted, plain English. Minutes later, the first version of his website was done. And here's the part I like. The domain, the hosting, the business email, all of it. One place, one account. No duct tape, no tech guy, and it costs less than what most people waste on coffee. So I can't afford it, won't work here. Rich Dad taught me, the poor say I can't. The rich ask, how can I? Here's how. Go to hostinger.com/richdad20 and use code richdad20 for 20% off. That's hostinger.com/richdad20. The people who change their financial future aren't the ones who almost did something. Go now. It's a great first step. Thank you for listening to my show. Listen to this carefully, please. Thanks to an obscure 112-year-old law, President Trump recently made a critical move that could impact your financial future, and it could create an explosion of new wealth for you and every hardworking American citizen. In fact, according to my friend Jim Rickards, a former advisor to the CIA and the Pentagon, with close contacts inside the Trump White House, the president's move could help unleash $100 trillion in new wealth. To find out how to stake your claim, go to the2026law.com for all of the details. That's the2026law.com. I'll add the link in the show description. Paid for by Paradigm Press. We're back, Rich Dad Radio Show, Robert Kiyosaki. We just laid out the 6 words: income, expense, asset, liability, cash flow. Now let me show you the line that flips a liability into an asset. Because right now, for most of you, your house is a liability. Not because I say so, because of the direction of the cash. Every month, money flows out. Mortgage, taxes, insurance, repairs. There's actually an acronym for it, PITI. Principal, interest, taxes, insurance. I call it pay it till I'm dead. Nothing flows back in. That's a liability, full stop. Here's the line that changes everything. One line on the same piece of paper. It says rental income. That's it. You take that exact same house, same mortgage, same taxes, same insurance. But now someone else is paying you to live in it. Rich Dad used real numbers when he taught me this. Say the expenses come to $1,000 a month and a tenant is paying you $1,200. Now the money is moving the other direction. That house, same 4 walls, same PITI, is now an asset. Nothing about the house changed. The cash flow changed. Most people never make that move. You know why? Because their real estate agent already told them the house they live in is the asset. Of course he did. He gets paid either way. Here's the problem. People say, I don't have a mortgage. My house is paid off. Doesn't matter. You've still got taxes. You've still got upkeep. Money is still flowing out. A paid-off liability is still a liability. Let me say this again because it's the whole lesson. It is not the house. It is not the object. It's the direction of the cash. And once you see that, you start looking at everything different. Your car, your boat, your kid's playroom you built onto the back of the house. But here's what nobody tells you. Houses aren't the only liability sitting in your life right now. Some of them have a heartbeat. Rich Dad used to say something that made people angry. He said people can be assets and people can be liabilities, not because he didn't love them, because he could read a financial statement. Let's start easy. Is a kid an asset or a liability? Go ahead, get mad at me. A kid is a liability, a wonderful one, but a liability. Diapers, then braces, then a car, then college. They don't get cheaper, they get more expensive every single year. There's a form for it, FAFSA, Free Application for Federal Student Aid. There's nothing free about it. That's not me being cold. That's me reading the cash flow. Now here's the one nobody wants to talk about, your parents. As people get older in this economy, they can become liabilities too. I have a friend. His mother had long-term care coverage. The insurance company canceled it, just like that. Now she needs a facility, and it runs over $20,000 a month. He doesn't have $20,000 a month. So he built her a room in his house. He loves her. Of course he loves her. But love doesn't pay the bill. His savings are draining every single month. Out. Here's a question I want you to ask yourself. If your mother or your father needed $20,000 a month starting today, could you cover it? Most people say no. That's not a failure of love. That's a failure of cash flow. And people don't plan for this because they think the safety net will hold, the pension, the insurance, the government check. Most people are betting their parents' care and their own future on a system that is already cracking. In 2026, that crack is turning into a break. When we come back, I'll explain the three-legged stool philosophy and why it doesn't work in 2026. I've got a neighbor, retired guy, smart guy. For years, he's been telling me about this business he wants to start. He's got the idea, he's got the plan, he's even got the name picked out, but he never launches. You know why? The setup. Which website builder? Which domain company? Which email tool? He'd open 5 tabs, burn 3 hours, and have nothing to show for it. So the business stayed in his head, where it made him exactly $0. Last week, he finally launched. I asked him how. He said, Robert, I didn't build a website. I had a conversation. He went to Hostinger and just told their AI what he wanted, plain English. Minutes later, the first version of his website was done. And here's the part I like. The domain, the hosting, the business email, all of it. One place, one account. No duct tape, no tech guy, and it costs less than what most people waste on coffee. So I can't afford it, won't work here. Rich Dad taught me, the poor say I can't. The rich ask, how can I? Here's how. Go to hostinger.com/richdad20 and use code richdad20 for 20% off. That's hostinger.com/richdad20. The people who change their financial future aren't the ones who almost did something. Go now. It's a great first step. Thank you for listening to my show. Listen to this carefully, please. Thanks to an obscure 112-year-old law, President Trump recently made a critical move that could impact your financial future, and it could create an explosion of new wealth for you and every hardworking American citizen. In fact, according to my friend Jim Rickards, a former advisor to the CIA and the Pentagon, with close contacts inside the Trump White House, the president's move could help unleash $100 trillion in new wealth. To find out how to stake your claim, go to the2026law.com for all of the details. That's the2026law.com. I'll add the link in the show description. Paid for by Paradigm Press. We're back. Welcome back to the Rich Dad Radio Show. This is important. We just talked about two-legged liabilities. Kids, aging parents. Now let's talk about the system that was supposed to catch you. There used to be something called the three-legged stool. One leg, your savings. Second leg, your company pension. Third leg, Social Security. That stool held up an entire generation. Well, look at it today. Pensions, almost gone. Savings, interest rates crushed for years. Social Security, everyone in Washington knows the math doesn't work. Nobody wants to say it out loud. 3 legs, and most of you are sitting on 0. Meanwhile, the government keeps doing the one thing it knows how to do, print. Trillions, not billions, trillions. The Federal Reserve, federal? Sure. Reserve of what exactly? They call the report CPI, Consumer Price Index. I call it covert printed inflation. Every dollar they print makes the dollar in your pocket worth less. That's not a conspiracy. That's arithmetic. And insurance companies see it too. That's why they're canceling policies. Long-term care, life insurance, the fine print you never read. They ran the numbers, and the numbers said, we can't afford to keep this promise. So they did it. Most people are trusting a system that is already backing out the door. Here's the trap. While the stool is collapsing under you, you think you're safe. You think you've got a plan. You've got a 401k. You've got an IRA. I need to tell you something about that account. The one you've been putting money into every single paycheck. It might be the biggest liability you own. Let's use the same test we use on the house. Which way is the cash flowing? Every paycheck, money goes into your 401k. Good so far. But when does money come back out to you? Not for decades. Maybe never if the market's down the year you need it. And even then, there's no guarantee. It's tied to the stock market. It's tied to a company. It's tied to promises somebody else made. And they call it a 401k. I call it a 401ok. Good luck. Same with an IRA, individual retirement account. Individual is the key word, because when it's gone, you're the individual holding the bag, not the fund manager, not the advisor who sold it to you. You. Here's the real problem. Financial IQ was never about your college degree. It's about how big a problem you can solve. If my friend needs now $20,000 a month for his mother's care, and I could create that cash flow easily, that's a high financial IQ. If all you've got is a 401k that took a hit last quarter and a hope that Washington fixes Social Security, that's not a plan, that's a prayer. Now let me ask you something even more uncomfortable. Houses can be liabilities. Kids can be liabilities. Retirement accounts can be liabilities. What about the person you married? Some of the biggest liabilities I know wear a wedding ring. I've got friends in a club nobody wants to join. I call it the $1 million a year club. It doesn't mean they make $1 million. It means $1 million a year leaves their pocket. Alimony, child support, lawyers. Round 2. They call it alimony. My friend's got a better name for it. He calls it all my money. Here's how it happens. Somebody gets successful, gets a little money, falls in love, doesn't ask the 6 words, doesn't check the cash flow, just signs. 10 years later, it's over. And now there's a court order that says money moves out every month for the rest of his life. That's not romance. That's a liability with a signature on it. I'm not telling you don't get married. I'm telling you Rich Dad's test doesn't stop at real estate. It applies to relationships too. Is this person, this partnership, putting money and energy into your life, or is it draining out? Most people never ask. They think love and cash flow live in 2 different rooms. They don't. They live in the same house, same financial statement. So here's where we are. Houses can be liabilities. Kids can be liabilities. Aging parents can be liabilities. Retirement accounts can be liabilities. Even the person sleeping next to you can be a liability. I told you at the start of this show to count them. So let's actually do it right now in your head. How many are you carrying? At the start of this show, I told you there's one line that turns a liability into an asset. You already know what it is. I gave it to you a few minutes ago. It's not a tax code. It's not a government program. It's a single question, asked over and over about everything in your life. Is money flowing in or is it flowing out? Ask it about the house. Ask it about the car. Ask it about the account you call retirement. Ask it even about the people you love the most. Not to stop loving them, to stop lying to yourself about the numbers. Because a poor person and a rich person can own the exact same house, have the exact same kids, the exact same aging mother. The difference isn't the liability. The difference is whether they ever ask the question. Most people go their whole life never asking it. They call their house an asset because it feels true. They call their 401k a plan because it's the only plan they've got. They call their relationships love and never once look at the cash flow. That's why they stay stuck. Here's the shift. It's small. But once it happens, you can't undo it. You stop asking, what do I own? You start asking, what is it doing for me? And once you see it that way, you can't unsee it. Thank you for your time. Thank you for caring about your future. Thank you for understanding that you are the only one who cares about taking care of you. Take care.
This podcast is a presentation of Rich Dad Media Network.